All right, let's dive right into this explainer and explore how the traditionally paper-heavy, kind of tedious world of tax administration is undergoing a massive, high-stakes digital revolution. For decades, tax practice has basically been synonymous with mountains of paperwork, physical ledgers, and just endless manual calculations. But today, technology is completely flipping that script. We're going to look at how software, artificial intelligence, and even blockchain are transforming not just how we file our taxes, but the very nature of what a taxpayer might even look like in the future. Look at this scenario for a second. It's straight from a projection by McKinsey. I mean, it sounds completely like sci-fi, right? Should robots pay taxes? But as intelligent agents and robotic process automation literally take over the repetitive accounting tasks that humans have always done, we really have to ask ourselves, if a machine is doing the work that used to generate human income tax, how on earth does the government replace that lost revenue? It is a fascinating question, and it really underscores just how disruptive this tech is going to be. Just to put that into perspective, by the year 2030, up to 375 million people globally might need to switch job categories entirely as automation takes over. That is roughly 30% of the current global workforce. For tax practitioners, the machines are absolutely coming to crunch the numbers. So what does that mean? It means humans have to evolve and focus on high-level strategy and advisory work instead.
Moving into Section 1, the digital tax revolution, we're shifting from physical limitations right into digital mobility.
Think about the crazy contrast here between the old days and our modern reality. On one hand, you have the traditional agonizing process of gathering physical paper documents, traveling miles and miles for in-person audits, and manually computing every single liability. On the other hand, the modern side, we're talking e-assessments that are auto-computed and sent straight to your inbox, and post-audit meetings happening entirely over video calls. Even getting your tax clearance certificate is an electronic process now. It's literally night and day when it comes to efficiency. Okay, Section 2, Navigating Fairs and Tax Promax. This is the real operational powerhouse of tax automation in Nigeria.
This system handles the whole shebang. Through the Tax Promax portal, e-registration allows you to self-enroll and immediately get assigned a unique tax identification number. Bam, just like that. Once you're in, the system takes over the heavy lifting with e-assessments, automatically generating your tax liability when you file your returns. And of course, e-payments are totally revolutionized. You don't have to physically drag yourself to a bank anymore. You can pay through POS terminals, USSD codes, or just directly online using your debit card while sitting on your couch.
So when you actually sit down to file, say, your company's income tax or VAT, the whole procedure is chunked into these clean, super streamlined steps. You log into the portal, click the Taxes Due tab, and just follow the prompts. The system guides you through filling in your specific schedules, like sales adjustments or exempt goods. Once you confirm everything and hit submit, it instantly generates a payment reference code. From there, you just finish the transaction online through the Romita platform for a seamless payment. It literally takes what used to be a multi-day headache and condenses it into a few clicks. Section 3, Taxing the Digital Economy. Here's what we try to solve the massive global e-commerce puzzle. Now, to solve that puzzle, we have to talk about SEP, or Significant Economic Presence. Historically, if a company didn't have a physical brick-and-mortar office in your country, they pretty much avoided local income taxes. Easy loophole, right? Well, the OECD pushed for a framework to close that gap. And through the 2020 Finance Act, Nigeria adopted SEP to legally tax non-resident tech giants based entirely on their digital footprint, even if they don't have a local corporate entity. In Nigeria, the magic number to remember here is 25 million naira. If a non-resident global tech company brings in 25 million naira or more in annual gross turnover from local digital activities, boom, they trigger that significant economic presence. They are officially in the tax net. But you might be wondering, what actually triggers that liability under the localization test? It's not just about the money, it's about targeted interaction. So if a foreign tech company purposefully uses a local.ng domain, registers a website locally, or customizes their platform to show prices and bill people in Naira, they are actively participating in the local economy, and they are absolutely subject to taxation. All right, moving to Section 4, the future. We're going from AI straight to blockchain. First up, we've got cloud computing. This is a huge deal because it completely wipes out the need for those expensive, high-maintenance physical servers taking up space in accounting offices. Because everything lives in the cloud now, tax practitioners can access automated software from literally any device with an internet connection. An accountant can crunch numbers, forecast liabilities, and collaborate with their clients, whether they're at their desk or just checking their smartphone at a coffee shop. And while the cloud holds the data, artificial intelligence and robotics are stepping in to handle all the grunt work. Tools like optical character recognition, or OCR, are a total game changer. They let you use Mobi cameras to instantly convert physical documents into digital text, which completely eliminates manual data entry. You've got bots handling routine tasks and AI chatbots answering taxpayer questions. By letting machines do all that boring, repetitive work, accountants are freed up to focus entirely on high-level strategy. Then, wow, we have to talk about the sheer impact of blockchain. We usually just associate it with crypto, right? But its true superpower for taxes is as a decentralized, immutable ledger. Imagine a transaction where the tax authority gets access to the data chain the absolute second the deal happens. Because the ledger is shared and literally cannot be altered, you don't need end-of-year reconciliations anymore. And the wildest part? It could fundamentally eliminate the need for tax audits altogether, simply because everyone verified the data instantly. Which brings us to this absolutely crucial new reality. Data has become the new cash. In today's tax environment, data is not just a bunch of static numbers sitting on a boring spreadsheet. It's the vital fuel powering predictive analytics. It allows administrators to spot risk factors, predict anomalies, monitor financial statuses in real time, and ultimately drastically boost how much revenue the government can generate.
Let's move to our final section, Section 5, Challenges and the Path Forward.
Now, obviously, it's a delicate balancing act. On the challenge side, we're facing some very real hurdles. Low computer literacy, spotty internet infrastructure, the constant threat of cyber attacks, and some pretty steep upfront implementation costs. Plus, you always have the classic garbage in, garbage out data problem. But if you look at the opportunities, overcoming those hurdles unlocks massive potential. We're talking true global mobility, immense long-term cost savings, and the chance for the entire profession to elevate itself from simple data entry clerks to high-value financial advisors. So as we wrap up this explainer, I really want to leave you with this one provocative thought to chew on. As AI, smart contracts, and automation take over more and more of our global commerce and daily tasks, we are truly entering uncharted territory. If the entities doing the actual work and generating the profits are no longer human, how long is it until the very concept of a taxpayer fundamentally changes forever? It is a fascinating future, and it's one we're already stepping into. Thanks so much for joining me on this deep dive, and keep questioning the data.